Jack, it's good to have you. What do you think is really going on here?
I think it could be some near-term short covering because if you look at what's going on in the bond market, it's sending a lot of consistent signals, right? It's saying that the Fed is going after inflation. It says that the economy will likely slow as a result of that. It's also saying credit conditions are tightening. We're seeing credit spreads. The willingness of lenders to extend credit has actually pulled back. So you take all of that together, and of course, we've also had a 10-year Treasury that's gone from 1.5 or 1.7 to 2.5 thereabouts. You know, all other things being equal, that should say that the equity market should pull back between 15 and 20%. Obviously, it hasn't. So I think that what we're seeing on the equity side is, first of all, they're fighting the Fed, which, you know, in my decades of experience, I've been taught not to do. And the other is, I think it's probably short-term, short covering, because I think it really just doesn't have the legs to just keep going.
Why?
Especially with earnings not ratcheting higher to offset it.
Why do you think the stock market is fighting the Fed here?
You know, I think part of it is with overnight rates still low and a lot of the yield curve still below the inflation rate. Perhaps investors are saying, look, you know, we'll catch this momentum. We'll just keep going. We'll, try to clip a dividend. But, if I look at a relationship between inflation and PE ratios, we are in uncharted territories. And either inflation has to move just downward dramatically, or PEs have to compress. You just can't have both. And right now, equity investors want both.